Welcome back to Grown Quality. My name is Elian, and oh boy, do we have to discuss Lululemon. Because what's going on? If we look at their stock price, it almost seems as if if like this is their headquarters. Like everything's on fire and everything is going terrible. If we look at the stock chart, we can see that it's just, after the last earnings report, it's basically in a free fall. It's skydiving. It's incredible. So let's discuss what is going on here, what the issues are with the stock or with the company, and what investors are seeing as troubles. And what I want to start out with is this little snippet that I got from a retail report from Deloitte. And what they are saying is that consumers have been benefiting from rising wages due to a strong labor market and declining inflation. Now, this report went over the retail outlook for 2024, and what you are seeing is written before this year. So, the benefit of rising wages and a strong labor market, true. Declining inflation, true. But real wages have been lacking a lot in previous years. Now, they continue to say that they have also drawn down their pandemic era savings to fund more purchases. And this dip in personal savings, however, will weigh on consumer spending in 24 and 25. In addition, consumers face headwinds from high rents, rising house prices, and repayment of student loan debt. Now, this is all very true, and they also say that there are two key trends that will shape the future of the business environment: a tighter labor market and higher long term interest rates. Now, this is all very obvious, we know this, but basically, this comes down to consumers having less money to spend. And that's an issue that Lululemon is also facing. And we will continue to go deeper and deeper into why. And at the end, we will see what has to happen in order for the stock to reverse. Now, let's continue because in this chart, we can see what Deloitte is expecting in growth numbers. And we can see in the blue mark that's 22 to 23, or not what they expect, what they have been. So discount retail has grown a lot, mass retail grown slightly, and club has stayed stagnant in 22-23. Now Lululemon, of course, is none of these three. They are definitely not a discount retailer. They're in the sporting goods, and the sporting goods segment has been declining for the past 2 years. Now Lululemon hasn't really been affected by this, but the market they operate in is having a really tough time. And we have to acknowledge that. The difficulties in retail, we get it. We see it, we know it, we hear it all around. So, what did Lulu say in their last earnings release? Because that's also why the stock dropped as much. Now, I have highlighted it here for you. And basically, what they said is that they have been navigating what has been a slower start to the year in this market. And in this market, they mostly mean the US market, the US athletics world that they operate in. Now, they also said on a question like, is it traffic or conversion problems, or how do you see that? And then does that mean the business is currently running at the 1Q guide like that 9 to 10%? Or how should we think about the comment in relation to the first quarter guidance? Now, this is questions, or these are snippets from their earnings call. This is the script from their earnings call. And Calvin McDonald, the CEO, basically said, in terms of what we are seeing, as I mentioned, all international markets, including Canada, are continuing their strong momentum into Q1. So that's very good, of course. And in the US, we are really navigating the dynamic retail environment with the consumer that's a little soft coming into the year. Now, that's of course what you don't want to hear, because the US is their largest market. They get most of their revenues and profits from the US. Now, Canada is large too, but the US is their home base. That's, well, not their home base, they're Canadian, but well, that's where they get most of their revenues. Now, quite a funny thing actually after that is that Megan Frank, the CFO, stepped in and said, great. And Alex, I'd just like to ask on the Q1 guide relative to current trends, we don't speak to inter-quarter trends. Basically shutting him down like, don't give any more comments on this. And this made it sound like, okay, like interquarter is really bad. They are not doing good, and we don't want to hint too much towards that. We'll see how things pick up towards later in the quarter. So we know that retail is difficult, overall retail, because that's what the Deloitte research paper said. We know what they said in their last earnings report. Now we have another thing that's causing issues. And that's more so towards uncertainty, because Lululemon Athletic has agreed to acquire the operations and retail locations of its franchise partner in Mexico. Now, this news came out last week, and initially it wasn't really confirmed, but by now it is. The local franchisee, Lululemon Mexico, runs 15 stores in the country and has been in business since the Vancouver-based athletic wear brand entered the market in 2017. All its employees will migrate over to Lululemon. The company confirmed in an email it didn't disclose financial terms. Okay, so we get that they don't disclose financial terms. That's more common. But what does this signal? Because that's what you have to ask here. And what this signals is that Lululemon is trying to to maneuver itself in more positions to be better able to capture growth. Because it sounds like the US keeps struggling, it didn't really improve, and now they are looking for other ways to grow, including buying out the franchisee and putting their own capital in there and being able to grow that faster. Now, that's not really what you want to see if it's a consequence of their struggles in the US operations, right? I mean, if it's just normal expansion, perfect. If they are struggling in the US where they get the most revenues and now try to go outside the US and into, well, semi new markets, I mean, they are there already, of course, that's maybe not so great because then they are looking for new paths of growth if one just isn't really doing as it should. Okay, so let's continue with another worry. Now, another issue that is really hinting at potential Lululemon struggles is not one that's directly correlated to Lululemon itself, but it's more so towards, well, Walmart and Target. And after this, I got one more issue, and that's also a very important one. So bear with me. Now, Walmart and Target earnings pull back in the curtain on an America struggling with high inflation. And that's really true. Now, this was a headline, of course, I found on Yahoo Finance. And the headline in and of itself is, well, it's fun, but what do they mean? And I'm going to show you with snippets from another earnings transcript, as well as their actual numbers, because I think this is very important and it's good to know because, well, it's basically a hint towards what might start to happen at Lululemon. And why do I say so? Walmart is known as being slightly, well, if they like they say they are upmarket, but they are a little cheaper and down market from Target. Target is more upmarket, slightly more expensive than Walmart. And, well, we see what consumers are doing in their numbers. Now, this is a part I got from the Walmart earnings call, and this is just one of a few moments where they mentioned this. But what they are saying is that they've had more growth, as mentioned in the earlier remarks, on the high end consumer. Normally, they say they have the low end, mid end, and high end is over $100,000 of earnings, and they have basically been one third for their earnings. But they now see more growth at the high end consumers. And that remains true. They are very focused on value, flexibility, and convenience, and that's working across income segments. So they focus on value, and the high end consumer is looking for value. We know people are getting wrecked by inflation. And, well, we've seen it in all previous arguments. But where it really comes to show is when we look at the income statements. Because here we have Target, and we can see that Target, the sales, they decreased by 3.2%. Now, a decrease in sales of 3.2% is bad of itself, but when your cheaper competitor grows their earnings by 5.9%, well, then it's just bad. I cannot say it any different. It's bad. And that means that Target, a little more high end retail, or for as far as you can say so, but it's targeting a little more high end stuff, is shrinking, and Walmart, more value based, is growing. That's not really weighing in the favor of a retailer like Lululemon, who's selling, well, let's be honest, quite expensive stuff. Now, there is one more thing, and this again is not great. And after this one, I will explain what I want to see from Lululemon in order to fix all this. But this one last thing that's, well, Lululemon announces evolved structure of product and brand teams. And that's a really good way of saying the chief brand officer left the company. Now, I wrote on my website Lululemon announces organizational changes, and I will just show it on my website how I wrote it, but it's not just organizational changes. Let me grab my website. Okay, now as you can see, I've commented on some of the recent earnings, like that of Target, that of Elf, the one of Nvidia. But what I want to show you is this one. And well, once again, the announcement wasn't great. Basically, the brand officer, the chief brand officer, it's jumping ship. That is almost what it sounds like. And I know that's a very bearish way of saying it, but it might be what it is, or they just don't see any fit for her anymore in the company, and she's taking her own stuff and leaving instead of being fired. Anyway, let's discuss what's gonna happen next. Now, I just mentioned that the chief brand officer is leaving the company. That's not true. It's chief product officer. Sorry, but the chief brand officer is picking up the responsibilities of the chief product officer. In my post here, I described it as a small restructure, basically, because they are shifting their executive and director roles a bit, who's reporting to who picks up what responsibilities, because they're not going to refill that position. That position is gone, and well, it's gone. Now, what is next is that Lululemon will have to report earnings next week, and that's an important one. Now, we have seen Lululemon run into earnings already often with a quite bearish take due to high valuations, but right now the valuation isn't really that high, but uncertainties are. So that makes for a fun mix, right? If they come in and give good, clear guidance, clear the skies, and make sure to let investors know, like, we're doing good. Struggles are not as bad as they seemed. That's a very good catalyst for the company to run out or to run on their earnings report. But they will have to clear the skies of the worries we just mentioned. Because why did the chief product officer leave? How does the acquisition of the Mexican franchisee fit in their strategy? Why are they doing this? Is it looking for other parts of growth, or is it looking for additional growth? Those are two very different things, of course. Now, what we also might want to know is, how is their shipping going? Because we know the Red Sea is, well, they have their problems. And how are their shippings going? Is it impacted a lot or not as much? In the last earnings call, we didn't really hear from it. So maybe it's a good thing to give us updates now. And basically, all the things we just mentioned, they have to go over them. They have to explain them. They have to explain what they see and how they deal with it. Because that's the issue I think that's going on here. It's not that the company is doing bad. It shouldn't be. I mean, the last earnings call wasn't really great. but it's not really a let's sell the stock down over 30% type of terrible. So they have to come in and clear the sky. I think they are perfectly fine in doing so. They can do that quite easily. And I think the company should be able, or the stock should be able to settle down, maybe come up a bit again, but it's not really useful to make any prediction on that. What I can tell you that is useful is signing up for my newsletter. Now, I know that's a sneaky way of selling that, but in my newsletter, I give updates on stocks, on growth stocks specifically, a lot of tech, but also the high quality companies. The so called compounders, I also like them, but I also like these smaller growth companies that are basically hyperscaling or hypergrowth. Now, I try to mix those a bit and I give a newsletter every day of the week on Monday through Friday. And on Wednesday, I try to give a stock analysis of a different company every week. If you're interested in that, in order to have a good quality growth watch list with companies you truly understand instead of just like growth of it, make sure to head over to my website. It's the top link in the description below. And make sure to sign up for that newsletter. And with that being said, please like and subscribe to my channel. And I hope to see you in my next video.